What is an ERISA bond? In 1974, Congress passed the Employee Retirement Income Security Act, which is a federal law created to regulate retirement and health plans for the protection of the plan participants. The legislation requires plan administrators to appropriately disclose financial information regarding the retirement plan, establishes regulations surrounding the role of the fiduciary, and provides plan participants with rights of recovery should they suffer harm due to the malfeasance or negligence of the plan administrator. In order to provide financial security for the enforcement of the law, fiduciaries must purchase and maintain a surety bond known as an ERISA bond. The bond ensures that plan participants, who will most likely be employees, will receive compensation for financial harm if the fiduciary causes a loss due to fraudulent or dishonest acts. In short, the bond is a type of insurance that protects employees from unethical actions committed by plan fiduciaries. The bond limit for an ERISA bond will be a minimum of 10% of the plan's total assets. The bond is required for all employee benefit plan trustees and is regulated by the United States Department of Labor. So how is the bond amount determined? The Department of Labor requires the bond amount for ERISA bonds to be at least 10% of the total assets of the employee benefit plan. The bond must have a minimum limit of at least $1,000. The bond limit is not required to exceed $500,000 or $1 million if the plan holds employer securities. For example, a plan official who oversees a benefits plan with $1 million in plan assets must purchase a $100,000 ERISA bond. So what happens if the plan assets increase to over 10% of the bond amount? If the plan assets accumulate or appreciate to an amount larger than 10% of the bond amount, then the bond amount will need to be increased in order to stay compliant with the Department of Labor's regulations. However, many surety companies include a plan provision known as an inflation guard. An inflation guard automatically increases the bond amount during the bond term to an amount that is acceptable to the Department of Labor. So what are the underwriting requirements for ERISA bonds? Most surety companies issue ERISA bonds freely, meaning no credit checks or financial reviews are required. However, underwriters will seek the following information when determining a fiduciary's eligibility for an ERISA bond. Does the plan include any non-qualifying assets such as real estate, limited partnerships, and non-participant loans? Plans that include non-qualifying assets will need to purchase a bond with an amount equal to the greater of either 10% of the total plan assets or 100% of the valuation of the non-qualifying assets, whichever one is greater. How many trustees are associated with the plan? Plans that have 10 or more trustees will need to submit an explanation to the surety company as to why there are so many trustees on the plan. Is the plan structured as an MEP? Or, in layman's terms, are multiple employee benefits plans covered under the same bond? So how much does an ERISA bond cost? The premium rate for ERISA bonds are determined based on the bond amount. The chart below illustrates the premium rates for ERISA bonds with limits up to $500,000. Viewers are encouraged to pause the video here and examine the premium amounts for each bond limit. In order to avoid claims made against the bond, employee benefit plan trustees should adhere to the following guidelines. Do not commit any acts of fraud or dishonesty against the plan, including, but not limited to, larceny, theft, embezzlement, forgery, and misappropriation. So how can an insurance agent obtain an ERISA bond for their customer? Bond exchange makes obtaining an ERISA bond easy. Insurance agents need to simply log into their account and search our database using the keyword ERISA to find their bond. Don't have a login? Enroll now by going to bondexchange.com and clicking on that big blue Get a Login button, and let us help you satisfy your customers' needs. If you like this video, make sure to subscribe to our YouTube channel as we post weekly content helping insurance agents obtain surety bonds for their customers.